There's a lot of information out there, a lot of news that the real estate market is about to crash, that we're in a bubble, do not buy, doom and gloom messages left and right. But is that really the case? So whether or not the real estate market's going to crash, there's no doubt we're definitely in a recession, but we also know that this is where wealth is made. And I like to say wealth is made, millionaires are made in the downturn. And what I'm going to tell you is that millionaires are always made in the downturn because why? Because there's going to be more opportunities. And that's where savvy investors are there to take advantage of them. Hi, I'm Juan Huizar, president of Sage real estate broker here in the city of Long Beach. I'm a real estate investor first, real estate broker second. So I know the market, but I'm in a unique situation where I have access to these real estate investors. And so a lot of them, I'm friends with them. I'm able to ask them questions. And these investors are not anyone that you guys would know through YouTube. They're people that have done the three things we all want to accomplish. We all want to be independent and wealthy. We want that passive income from our real estate holdings. And we want to be able to retire and have this income coming in and to be able to leave that nest egg for our family. So these are all people that have accomplished that. And those are the main goals. There's really no other reason to invest in real estate outside of those main reasons. And so these are people that have made it. These are people that I look up to, and I'm going to discuss with you all of the things that I've learned from these real estate investors. We're going to talk about inventory. We're going to talk about interest rates, pricing, sales, what they expect is going to happen in the market. These are factors that influence every investor's decision-making. And speaking of decision-making, we're going to tackle the mindset that investors are going to have moving forward for 2023. We're also going to look at how investors are going to be looking at investment deals. Because I'll tell you what, investors are still buying. They're flush with cash looking for opportunities. And that's what we're going to cover today. So let's dive right into it. Hands down, every investor out there, when I ask them, are you afraid to buy? Are you going to sit on the sidelines heading into 23? All of them unanimously said, absolutely not. We are buyers, we're investors, and we're going to be looking for the right deal. And I said, what is the right deal, right? Because you guys want to know the right deal. And so they said, we're looking for properties that have the location that are important to us. Now, one thing that I want you guys to know that the right deal is going to be different because some of that's going to be based on your individual preference. And that's one of the things that one certain investor told me. He's like, Juan, the right deal might be different for you than it is for me. Yeah, we all want a good rate of return. We all want a good cap rate. We want to buy into equity. These are all important things, but sometimes the right deal is different for everyone. Every investor here said the same thing. We'll hold as long as we have to. We're going to look for the good deals, but if we see something we like, we're going to go after it now. So let me give you guys an idea. I asked everyone about pricing. So that's going to be the first thing we're going to talk about is pricing. What's going to happen with pricing in 2023? They all believe that there's going to be a slight price reduction. I repeat, a slight price reduction. And the reason I want you to know this is that there's not this wave of good deals coming. There's going to be a few good deals. And I'll tell you why. So there's a couple factors on why the prices are going to drop. Okay. So this starts going into inventory. It starts going in interest rate because those three are all going to be aligned. So we have pricing, inventory, and interest rates. So those things are aligned. Okay. First, when it comes to pricing, everyone expects interest rates to rise. Okay. So for sure, they're going to go up one more time, possibly a second time. Hands down, everyone says, Juan, interest rates are going to go up. They also said, the market needs to start preparing themselves to accept the norm of 6%, to accept that that is the norm. And what we had before of 3% was just a temporary interest rate of that time of the economy, but it's normal. They all said, Juan, it's very normal for a 6% interest rate. Right now, it's a shock. It's a shock, and people are kind of waiting. To that point, if interest rates go up, values should drop down. Let's talk about inventory. What's going to happen in inventory? I would say the majority of the investors believe that inventory is going to go up. So if you're an investor, that's probably going to be good news. That means there's going to be more opportunities for you. Why are there going to be more opportunities for you? The first reason is there was a lot of sellers that were on the fence about selling, and they just couldn't make up a decision whether is this the right time to sell or is it going to go up another year? And that was the reason why a lot of them did not sell. Well, now that prices have actually stopped increasing for the first time in 12 years, now those are the people that are calling us and other brokers around here saying, I think it's time to sell the property. And what they want to do is protect the net worth that they've made, this equity that they've made before it does dip down. And so the people that were on the fence and there's a little uncertainty, those are the first people that are calling us saying, I think it's time to sell. But it's time to sell because they're seeing the market correcting itself and they're trying to protect themselves from this dip. Okay, so that's going to be the natural seller. 2, properties are sitting on the market longer. With that being said, that means we're naturally going to have more properties on the market at one single time, more so than we've had in the last 6 years. So again, if you're a buyer, this is a very good thing. And then 3, any property that was 5 units or more, those loans are adjustable. A lot of these people could have received a loan 5, 7 years ago, and now they're coming due. They borrowed money at low as 3%, and now it's at 6 or maybe even higher. In that situation, those people are not going to lose money. Why? They're not going to lose money because they held on to that property for a good amount of time. There's a lot of equity. Will they have to adjust their price? Possibly. But those are the people that, if they are not able to refinance at a new interest rate that is acceptable to them, they're going to be sellers. Again, those are not losers of properties because they're still going to make money, but they're going to be forced to sell because maybe they don't accept the new interest rate, which is, again, our new norm. There was a small percentage of investors that believe that inventory is not going to increase. And so there's opposing views to this. The other side said, Juan, inventory is going to remain the same because if you're an investor and you have taken on this really low interest rate of, say, 3%, why in the world would you sell that property and start paying a 6% interest rate? So for that reason, some sellers that were potentially going to be sellers might decide not to sell. So we have 2 opposing views. My opinion is that I do expect inventory to go up. That's what I expect. Also, when it comes to pricing, I do expect prices to go down, but I'll tell you what I'm seeing, maybe 10 to 15% in Southern California. I know there's a lot of folks out there watching, tuning in out of state. Your markets are going to be different. They're going to be unique. So this is not applicable to everyone. Certainly the interest rate is. The inventory is going to be a little different. But in Southern California, we're going to see a slight price reduction, increase in inventory, and interest rates will go up. Let's talk about lending and what people are going to be heading into. We sell a lot of fourplexes, and oftentimes the fourplex is the first asset that an investor gets into. We know so many successful investors that they bought their first fourplex and now they own 200, 300 doors, but that is kind of the gateway investment asset type that is out there. And so what's going on with that one when it comes to financing? So we know interest rates have gone up. You can buy a fourplex with 25% down. But one investor said, Juan, note this to these investors, these newer investors. We are now not in a market that is a 25% down market. Certainly a bank will give you that, but from a cash flow perspective, it's not going to balance. So what I've told people in the past, when we buy a fourplex, that first 12 months, 18 months, we might be negative. And I tell people all the time, let's not look at this property and think that it's going to cash flow, because it's not. It's the honest truth. It's really hard to cash flow in Southern California when it comes to 4 units. So what has happened? The prices are still high. They have not adjusted at the rate that interest rates have come up. Given that, the numbers look less favorable now than they did 9 months ago. So that means an investor would have to look at this property and say, every month I'm going to lose $1,500. Does that mean you don't buy it? No. This is independent to every investor. If you're an investor that could absorb that loss per month, and we see that there's still value in the asset, it's still a good time to buy. Now, if that $1,500 that you're going to have to pull out of your pocket, and it's what we call negative, hey, the property's negative right now. If that's going to hurt your lifestyle, your family having to do that, probably don't buy it. One investor said, Juan, we are now in a market where you need 50% down. That's all it is. You need 50% down moving forward. So for some of the investors out there, maybe this is going to take you a little longer because now you're going to need more of a down payment. If you could absorb the negative on the property, it's still not a bad time to buy. One of our investors said, hey, 9 months ago, a year ago, if you wanted to buy a fourplex, there were 20 investors out there with more money willing to pay more than you. So you probably missed out. So now we're sitting in a situation where you might be the only buyer, or there might be 2. And if you believe that prices are going to drop 10%, I would suggest this: offer 10% less now. They might take it. There's going to be a certain amount of sellers out there that want to get their property sold, and they're going to be under the impression that if they hold on to it for the next 24 months, chances are prices could drop. Who knows? Maybe they're tuning into this video. When it comes to a 4-unit building, there's going to be less competition for you. You could ask for way more concessions, meaning credits, repairs, price reductions now than ever before. Before, that was unheard of. You had to buy it as is. Now you could go in there and really negotiate. So make sure that you're working with a professional, a multifamily broker that does this all the time. This is their specialty. That's going to make the difference to you and your negotiating on that property. So given that, if you're looking to get into a fourplex, you probably are going to need more money down. That's going to be a fact. But we could also help you negotiate a much, much better price going forward. None of us believe that in Southern California, there's enough housing. We all know there's not enough housing. So this goes back to our point that is the biggest driver for values, is the fact that people need housing. And if you have the product, if you put yourself in a position to own the properties and have the power of having housing, you're going to put yourself in a position to win. Now, when it comes to 5 or more units, so for some of you who don't know, when you go into 5 or more units, they consider that commercial financing. So that's a different type of loan. Typically, those are for savvier investors. But here's what I want you to know. That landscape for getting loans of 5 or more units has changed drastically. In most cases, to purchase what's known as a commercial property, 5 or more units, banks are requiring between 50 and 70% down. Between 50 and 70% down. So you could see how that's going to eliminate a lot of buyers out there. Most investors are not used to putting 70% down and only borrowing 30%. So that's going to really tighten down that market, because there's still buyers, people still have money, but the buyers that are left are what we call like real buyers. No matter what the market's doing, they still believe in real estate, as do I. And those real buyers are going to look for real opportunities. But to finance those properties, they're going to have to put more money down than ever before. And so they'll accept the new higher interest rate, but they're going to want a price adjustment on that. And so they are actively putting in offers now. I don't want anyone to think that experienced investors are not buying right now. It's complete opposite. The most experienced investors are out there looking at deals with a smile on their face, because for the first time in many years, they're going to find those deals. One investor told me, Juan, I'm not really worried about this higher interest rate. I don't like it. I'll accept it. I'll buy it now. I'll try to get and structure a good deal now. And whether it's 24 months or 36 months from now, inventory is already catching up. So interest rates will go down again. And when they go down, I'll refinance. And so when we're looking at commercial properties, 5 or more units, you have the option that interest rate, you're not married to that for the life of the loan. You could certainly refinance as soon as they adjust. And so a lot of these owners are saying, if the location's right, if it's in an area that I know, like, and trust, and I know that it's a good deal and we're buying it below what they believe it's worth, they're going to do it. Let me talk about knowing your market. One of the investors said, Juan, you have to know the market. You have to know that it's a good deal. So that's either you as the investor knows that, or the broker that you're working knows that. It's hard for someone to know every market. I don't know every market, but I certainly know the Southern California market, and I especially know the Long Beach market. So I quickly could assess a good deal. And I think for an investor looking out there, I don't recommend that you're looking everywhere for a good deal. I think when you're doing that, you're not focused in the areas that you need to be in. So that's one of the tips moving forward, is figure out where you want to be. And one of the messages we've said before is go with what you know. So go in the areas that you already know, like, and trust, and let's focus heavily in those areas. Learn what properties sell for, price per square foot, cap rate, gross rent multiplier, all the things that I've covered in my prior videos, the 621 formula. Really, really understand those numbers, because that's where you're going to win, is when you know that something on the market is a very good deal based on these metrics. That is when you take advantage and you seize that opportunity, because that's what the experienced guys are doing. But you could as well. And speaking of good deals, what's a good deal? Now, I said earlier in the video that you need to find a motivated seller. What's a motivated seller? A motivated seller is someone who says, I definitely want to sell the property. for various reasons. Either they inherited it, maybe they're tired of the tenants haven't been paying rent, the property needs a lot of work, they've got some citations from the city for one reason or the other. Maybe the property is owned with multiple owners and someone has a life-changing event and they need to sell. These are gonna happen no matter what is going on in the market. If the market's up or down, these are situations where someone says, I have to sell. That is where you're gonna have a better chance negotiating a better price. Because what's on the opposite side? On the opposite side are other sellers who say, let's test the market, but I'm not gonna sell it at a discount and I only want this price, and if we don't get it, I'm taking it off the market. That seller is not motivated. They will sell if they get their price, but they don't have to. And why don't they have to? I've said before that a lot of apartment owners out there are making cash flow now. They've owned these properties for a very long time and they're bringing in the cash flow. And so what happens if they don't sell? Absolutely nothing. They haven't lost anything. They continue making that cash flow on their properties and they'll wait for the next real estate cycle and try to time the market then. So you have sellers and you have super motivated sellers. And that's really what you're looking for when you're out there buying. Another message that was clear with all these investors that we've interviewed was if you buy for the long term, you're not going to get hurt. 10 years from now, every deal would be a good deal. 10 years from now, every deal is going to be a good deal if you're buying in appreciating markets. And so again, I'm here in Southern California. We could close our eyes, buy anything, and know that 10 years from now, it's going to be a good deal. And here's my message to a lot of people that have just been on the sidelines as investors. Some of the folks did not want to buy because the market was too high and there was too much competition. Although interest rates were low, but the prices kept going up. So people didn't buy. And now some of those same people still don't want to buy because they think the market's too high. And so there's a lot of people that have just been on the sidelines. But while you've been on those sidelines, if that is you, everyone else who has invested has made tremendous rate of return and wealth, and it has done it. So my advice to you is let's stop waiting. Let's learn from these investors. They're saying, if it's a good deal, let's go buy it. So align yourself with the right real estate team and take some action in this coming year, 2023. So let's recap. How should you, the real estate investor, look at 2023? What should be your mindset? So here we go. We do expect prices to drop. So be patient. Okay, be patient, but don't sit on the sidelines for that long of a time. We're not expecting a massive price reduction. Okay, if the interest rate scares you, it's okay. That's the new norm. And again, you could always refinance later if that's the case. Also, you're going to need a larger down payment. That's going to certainly help with the foreign units and under. So make sure that we look for that. Inventory is going to increase slightly. And so part of being patient is waiting to find that right property with where the seller is super motivated. And just as a reminder, every investor that we interviewed was in an agreement that 2023, there's going to be less competition, meaning less buyers trying to negotiate on your same building, and that it's going to be a really good opportunity to get the right property and negotiate the price and terms that are important to you. So there you have it. That's all for now. Thank you for tuning in. Make sure to like, comment, and subscribe. And remember, if you're here in Southern California, we definitely want to meet you. And if you're out of state, we have nationwide affiliates. Please reach out. It's important that when you're investing in multifamily rental property, that you're working with someone who sells that type of product, who specializes it and who does it. And so we've aligned ourselves with those folks. We'd be glad to direct you in their direction. That's all for now. Thank you for watching.